How do a loan application process differ from a self-employed customers to a PAYG customer?
Uh, Again, great question. It actually differs quite a lot in terms of the documentation. The basics stays the same. Do you have enough income to service the loan you're after? Do you have enough equity or deposit? So those base questions are still the same. The process of verifying that income and what documents you're providing is very different.
Yes.
So again, bringing an example, you work for someone in a company on a position, you get a pay slip every fortnight or every month. In that case, all you do is provide those pay slips and we can work out your income. Very straightforward, very simple. The income usually doesn't really differ a lot.
No.
Self-employed customers can be so many different scenarios. Without confusing our customers, and if there's anyone self-employed out there, um, you know that there are multiple structures. You could be a sole trader, you could be a partnership, you could be a company, you could be a trust. You could be a trading trust or a discretionary trust. You could be a trading company or a holding company. So all these things comes into the play. We need to understand first what is the business structure, and that will then determine what documents do we need. In general, depending upon the structure, you would need financial tax returns, personal tax returns, notice of assessments, and we'll advise our clients that, hey, in your structure, we need this. If someone has more than one trading entity or an entity that is registered and active, you need to provide tax returns and financials for each one of them. If they are not trading, then we can probably get away with accountant giving us some confirmation. But then once all those documents comes together, we have to look for the flow of funds. They can be paid to the owner of the business in so many different ways. And each way potentially have a different policy applied to it.
Yeah.
Again, if I started explaining the credit policy, we'll be here until tomorrow. But in short, I'll say that a self-employed customer need to be a lot more organized
Yeah.
and prepared and have plans or plan it properly so that they don't get stressed out
Yeah.
and they actually enjoy the process. Because
Yeah.
vast majority I see do not plan and they literally just decide they want to do something. And the first thing they'll do is they'll just go and buy something.
Yeah.
And the first question as lenders and brokers, we ask them that, hey, have you done your tax returns yet?
Yeah.
And you'll be surprised, 5 out of 10 will say, oh no, actually I'll follow up with my accountant.
Yeah.
The problem there is the accountant is going to take another 4 or 5 weeks to finish it,
Yeah.
but your contract has a timeline, which
Yeah.
means we're not going to be able to produce the outcome to the agent in time.
Yes.
So first thing I'll tell all self-employed customers is you really need to prepare yourself 3 to 6 months in advance of a purchase.
Okay.
You can't just get up and just do it.
Yeah.
Look,
Yeah.
in
Yeah.
some cases it might work if the customer has all the documents available and
Yeah.
ready to go and income is enough and everything is ready, then yes, it can happen, but it's very rare.
Yeah.
It's very rare. Most
Yeah.
of the time, self-employed customers will be doing tax returns very close to the last date.
Yes.
So that's where it differs. Documentation requirement is very different.
Yeah.
Credit policies in the shape and form they are applied is very different, and it can get pretty complex. A lot of people will look at the business revenue as their income, but it's not the income.
No.
It's just the revenue.
No.
There are plethora of expenses that goes through, which then reduces their profit.
Yeah.
And then there's not necessarily that profit means your income.
No.
Accountant might have diluted that in many different ways as per the financials and the business requirements that year. So it's really coming to the bank, to a broker or a lender or us and say, hey, this is my current situation. These are my previous year's tax return. Have a look and advise where do we stand.
Yeah.
And that way you're prepared and you're not, overextending yourself.
Yeah.
You have very clear understanding of what is your business numbers are and what that translates into in your your buying or borrowing power.
Yeah.
And sometimes it could also mean that you actually can't do anything right now and you have to wait another 3 months, 6 months, 9 months until the next set of financials and tax returns are available. Because a lot of businesses go, hey, look, last year was pretty quiet, but we are going gangbusters now. So this year will be good. But usually that year is not translating into profits and tax returns until another 3 or 6 months.
Yeah.
Then we have to just wait.
Yeah. So with the PAYG, how many pay slips do you usually need?
Again, it depends. Look, nobody gets paid exactly the same amount each fortnight these days.
Yeah.
There's allowances, there's bonuses, there's all sort of things happening. the type of payslips we come through. Look, again, to simplify, usually 2 payslip in most cases will do the job. Sometimes when we get the payslip and the format of the payslip, if that does not give us the clear information of the breakdown of the income that customer has earned, then in some cases we'll go back and ask for more.
Okay.
But we'll always start with 2, and in vast majority cases, those 2 is enough.
Okay. Okay. And what documents and information is required for self-employed? Like how many years of tax returns and?
Great question again. Now, ANZ is pretty special, really good credit policy we have. We've been very popular for many years now for being able to do vast majority of self-employed loans based on 1 year financials.
Okay.
So that's a very good policy. Now, it does not fit everybody. There are cases where we need more than 1 year, but it's very hard to say where we need more than 1 year until we look at that 1 year first.
Okay.
And based on the information provided there and what figures we are seeing in terms of profit and expenses and structures, if we need the previous year, then we'll reach out to the customer and say, hey, look, we definitely need previous years. There are certain types of incomes. For example, if you're paying yourself a director fee or if you're paying yourself dividends from the company, we have to average it over 2 years.
Okay.
If a self-employed customer is going into LMI zone, which means they are borrowing more than 80%, then we have to shade a portion of their income, or we may have to shade a portion of their income, and that's when we need 2 years to get the averages. So it depends where we are. So we'll always start with 1 year, and based on what we see there, it will tell us if we need the previous year or not.
Okay.
But if someone is going for 90% lending and they are self-employed, we'll ask for 2 years straight up.
Okay. And if, for example, would you need a tax return, or will a notice of assessment can also do the job?
No. See, notice of assessment, think of it like a receipt.
Okay.
That's all it is.
Okay.
It does not give you any breakdown, any further information.
Okay.
There's a headline figure that your taxable income was this, your tax was this. That's it. Was it a dividend? Was it a director fee? Was it a profit sharing? Was it a salary? We have no idea.
Okay.
So tax return will provide that information because you can link it back to where it came from. Hence why you need tax returns and financials for all the entities, not just one. So if you give me business but not personal, I can see what the profit is, but I don't know how much you took. If you give me a personal, I can see how much you took, but I don't know how much business made. So you got to have everything, and you got to look at the flow of that income.
Okay.
And then we can work out that, hey, this is what your business made, this is how they gave it to you, because this is the way you got it, this is the policy we need to apply. But hey, there's few other things we can add back, depreciation, interest, there are a few things that comes into the play.
Okay. How can they prepare themselves for better chance of a loan approval for a self-employed customers?
Yes, first of all, always see the broker or the lender or the mobile lender before you make decisions in terms of purchases or renovations, or look, anywhere where there's a chance that you need bank to give you money and you have to apply for a loan. First thing you need to do is to sit down with the lender and give them what you have. Usually a lot of people will have at least not the current year but the previous year's financials. Whichever one you have, just give it to them so they can see your structure, how the business is run, how do you usually, or accountant usually distributes the income to you, and that gives them an idea that, you know, this is how it will appear on the future ones as well, and it will give them an opportunity to look at your historical incomes. If those tax returns are within the timeline of acceptance, we can still do a borrowing power based on what the numbers are. And if that can give you what you're after, well, the next step is to start the process. If not, we can advise that, hey, look, your historical income is not enough to get you what you want, but we realize these are almost 20-month-old financials. The one after this will be due in next 2-3 months. And as you're saying, your business is doing really, really well. Why don't we just wait and get, you know, a copy of that? And if they're going to show a lot better income, then your chances will be better. So that way the client is now aware that, hey, thank God I didn't go out and bought something, because if I did, I had 21 or 28 days to get an approval, and my 20-month-old financials or tax returns won't have cut it.
No.
Which means I would not be able to produce an approval, and that would waste everyone's time.
Yeah. What is the preferred time period you need for a self-employed clients? 21, 28?
I would prefer at least 28 as a minimum, but again, it depends. If the client is fully prepared, they have all the documents we need, 28 is plenty.
Okay.
But if they are saying, oh, I'll reach out to my accountant and I'll ask them to do my tax return, well, I might not get the tax return until the 28th day.
Yeah.
then it's not enough.
No. And with the pre-approval process, if the client is on a self-employed but pre-approved, then 21.
That's perfect.
That's perfect.
Then 28 is huge.
Yeah.
Because we have done everything.
Yeah.
We have collected all the documents, we have submitted everything, and everything is good.
Yeah.
So there's no, like, we have got to a point where application is processed 96, 97%.
Yeah.
The only task left, getting the contract, ordering a valuation, which usually gets done within 3, 4, 5 days. Once the report comes back, check the numbers, looks all good, give it back to credit, they'll take another 3, 4, 5 days and approval. So 2 weeks, worst case scenario.
Okay, good.
Self-employed should, everyone should have pre-approvals,
Yeah.
but out of the two categories, if I have to pick one and say they definitely need one, is self-employed.
Self-employed.
And I actually think, and this is probably just, I guess, a bit of a recommendation on your side, that as a real estate agent, if a self-employed customer is making an offer, do not accept it until they are pre-approved.
Yeah.
Because chances are that they're just going to take a long time.
Yeah.
There are few who will be ready or prepared,
Yeah.
but even then they will probably use the whole 28 days because it just takes time.
Yeah. Okay, good. What sort of different business structures and income streams for a self-employed customers, and its implications on borrowing power?
So again, going back to a few examples I gave just then. So for example, I mean, self-employed customers are generally aware of structures because they are operating their businesses in those structures.
Yeah.
But you either are a sole trader, partnership, company, or a trust. These are the most common, right? Sole traders and partnerships are, I guess, the basic forms of self-employed structures. Not very complicated. Most of the information is within the tax returns of the customer itself. So yes, it's still self-employed, they still need a tax return, but basic in nature. Whatever the tax return shows is usually what the figures are. The minute you move to the trust and the companies, it can get a little bit complicated depending upon how many. If customer is just a company and he's a director and shareholder, or they have a trust which is trading, then within each category there could be multiple categories, and how the income is distributed will actually impact their borrowing power. So I won't go into a lot of details, but I'll give you maybe 2 examples. So if you own a company and you run your business through that company, most common structure is that a person will just pull out whatever money he needs whenever he needs it. And at the end of the year, the accountant will do a tally through MyOb or Xero and say, hey, my client took drawings of X amount, which is usually shown as dividends on the company tax returns and personal tax returns. Or they might put that under director's fees section. If these are the 2 sections where your income is shown, then you need to provide 2 years, and the average of the 2 years is what your income is. Okay. So you might have taken out 200 grand this year, but only 80 grand last year. Well, we can't use 200. The average is going to come down to 160 or lesser. So that's where you think like, what's the difference? I'm getting the income, but it's the way it's being given to you. So that's one example. But if that same customer is running a company and he puts himself on a fixed salary, same income, and took that salary every month, paid the taxes, paid the super, it's going through the one-touch payroll, then we don't have to average it.
No.
We'll just use what you're on this year right now. It's a PAYG income. So that's one example. So same structure, but same income, but how it was paid can change the outcome. The other example I'll give you is trust. So when you have a trust who is trading, so you could have a XYZ trust trading as. So trust is trading the business. Now for that trust you have to have a trustee. Now either you can be the trustee or you can make a corporate trustee, which is a company. Now, small thing, but if you are the trustee of that trust, and let's say you have few loans in that trust for a couple of cars or whatever, those loans are your loans. They will reduce your borrowing power. We have to count them as your loan because at the end of the day, you as a trustee have guaranteed those loans. But if you make a corporate trustee and your distribution income is enough and we are not using profit from the trust or any add backs from the trust, then we do not have to worry about those loans because the company will look after them.
Okay.
Can change the outcome massively.
Okay.
Now, a lot of customers are really not aware of all these ins and outs, and usually the structures are not created for banks,
No.
right? Bank is just one little part of the whole journey as and when these clients need to borrow. These structures are put in place mainly depending upon what customers' preferences are and how does it fit in the tax planning in the long term, right? So I just tell my clients, whatever structure you have is the best structure for you. Trust your accountant, but within those limitations and with the figures in front of us, this is the outcome.
Yeah.
Because this is how they have done it.
Yeah. Okay. Wow.
Yeah.
Too much. So I think you've already answered my next question, which is, can someone get a loan with 1 year financials and tax returns?
Yes, vast majority can.
Yeah.
The main distinction I'll make here is that if you're self-employed, you want to borrow 80% or less, you don't need more than 1 year.
Okay.
If you want to go over 80%, then you definitely need more than 1 year. And the only other time when you may need more than 1 year, especially when you're borrowing below 80%, is how the income is given to you.
Okay.
So going back to that example, if you take dividends or you take director's fee, we still need to average the 2 years.
Okay. And I'll just go back to the profession. So if there is a GP who runs a medical clinic, because he's from medicine, does he just need 90% with 1 year tax return?
So again, I don't want to confuse, but for the benefit of our medical clients, so that they know, their accessibility can be ascertained in a lot more flexible ways.
Okay.
Now, it's just that it's a profession that every bank prefers, and historically, they haven't seen any, closures on these loans in past. So there's a lot of trust. So a GP, if they've been running their business for a while, if their tax returns are not available, we can work with them with a lot of alternate documents.
Okay.
Things like invoices, BAS statements.
Okay.
It gets run through a different department, which we call ANZ Health.
Okay.
There's a dedicated team who looks after just the medical clients.
Okay.
So there are alternate documents, but they are applicable only to that profession.
Okay.
And again, it's a bit of a lengthy process to verify the income, but yes, it is available.
Okay. That's good.
Yeah.
So
But if they have the tax returns available, that will be our first protocol,
Yes.
because that's the quickest and the easiest.
Yeah.
But if they are not available, and they're not going to be available for another 2, 3, 4 months, and we are on a time limit, then we can look at the alternate documents and say, hey, is there a possibility here to prove this income in a different way?
Okay. Good to know. And similar scenarios with the accountants as well?
No. So unfortunately, Medico is the only profession where they will look at the alternate documents, nobody else.
No one. It's okay.
So I'll give an example, like just did one loan for a GP. He was working PAYG for public health for 4 or 5 years, went on his sole trader ABN about 8 months before I met him. So we didn't have any tax returns because it's just been 8 months. It won't be available for another 4 or 5 months. And he made an offer on a property. So we had a very strict time limit. And based on what he told us verbally, we knew the income was there. It was just a matter of proving it. Without tax return, it is impossible for a self-employed customer to prove that income. So we took that scenario to our ANZ Health team. That's where we have dedicated health managers or business banking managers who works with health clients.
Yeah.
So we workshopped the deal between myself and that person, and we requested all the relevant documents from the accountant, which is invoices, BAS statement, account statements, and all the rest, and even interim P&Ls from the accountant. Once we got all that data, then it all went to our business team first to kind of look at the overall figures and numbers. They did their own calculations in terms of what they think the minimum income could be. So they will apply a certain percentage of expense to that revenue. And then the credit assessor will look at that picture and go, hey, am I comfortable to give them this loan amount based on what I can see what's coming in and going out? Yes, it's not on the tax return, but I've got few other documents here to prove that. And at the end, they will come back and say, look, we can give you the whole lot that you're asking for, or no, with the income we are looking at, we are comfortable to go up to X. We can't go up to what you need, and if the customer can bridge in the gap, then we can still proceed.
Okay.
So it's a bit of a roundabout way. It does take time. So if anyone is looking to do something similar, just know that this whole process can take 3 to 5 weeks minimum. There's a lot of back and forth
Yeah.
because we don't really have a certain document giving us the taxable income.
Yeah.
We're just trying to join the dots to work it out,
Yeah.
and that sometimes requires going back to the account and asking more questions, then just plugging the numbers, then going back again
Yeah.
and getting more documents.
Yeah.
So it can take time.
Yeah.
But we have done few scenarios like that where doctors, especially when they're really busy, they don't have time. Their accountants say, "Look, we are not due to do this for another 4 months," and they sometimes just make the move when they're free. So
Yeah.
then we have this option to make it work.
Yeah.
Won't work each and every time. There have
Yeah.
been some scenarios where after 4 weeks the credit came back and said, "Sorry, nah, not comfortable,
No.
can't do it until
Okay.
you have tax returns."
Oh wow.
So it's not like a given
Yeah.
that just because you're giving us these documents, you will just get it approved.
Yeah.
It will be based on how much you're after.
Yeah.
So usually they'll come back and tell us that, "Hey, look, based on what we are looking at, we are comfortable offering an X because that's what you can afford. But if that's way lower than what the client actually needs, well, then there's no point even
No.
offering that."
No. So sometimes then you can go for like a joint name, maybe that joint income may support the loan, right?
We can look at all options
Yeah.
when we are
Yeah.